5. How set your financial goals to invest in the stock market. Sabri vlog. Setting financial goals is an essential step before investing in the stock market. Here's how you can establish your financial goals. 1. Identify your objectives. Start by determining what you want to achieve through your investments. Are you saving for retirement, a down payment on a house, education expenses, or any other specific financial goals? Clearly define your objectives to give your investments a purpose. 2. Quantify your goals. Once you've identified your objectives, quantify them in financial terms. For example, if you are saving for retirement, determine how much money you aim to accumulate by the time you retire. If you are saving for a down payment on a house, determine the target amount you need for the down payment. 3. Consider time horizon. Determine the time frame within which you want to achieve your financial goals. Some goals may have a shorter time horizon, such as buying a car in 2 years, while others may have a longer time horizon, such as retirement in 30 years. The time horizon will influence your investment strategy and the level of risk you can afford to take. 4. Assess risk tolerance. Evaluate your risk tolerance, which is your ability and willingness to bear the potential fluctuations and losses in the stock market. Consider factors such as your age, financial situation, income stability, and personal comfort level with market volatility. A higher risk tolerance may allow for more aggressive investment strategies, while a lower risk tolerance may call for a more conservative approach. 5. Evaluate income and expenses. Take a comprehensive look at your income and expenses. Calculate how much money you can realistically allocate toward investments on a regular basis. It's crucial to have a clear understanding of your cash flow to ensure you can consistently contribute to your investment goals. 6. Prioritize goals. If you have multiple financial goals, prioritize them based on their importance and urgency. This will help you allocate your resources effectively and make strategic investment decisions. 7. Break it down. Break down your financial goals into smaller, manageable milestones. This can help you track your progress and stay motivated. For example, if your long-term goal is to accumulate a specific amount for retirement, set intermediate targets for each year or every few years to ensure you're on track. 8. Review and adjust. Regularly review your financial goals and make adjustments as necessary. Life circumstances and priorities can change, so it's important to reassess your goals periodically. Additionally, as you make progress towards your goals, you may need to adjust your investment strategy to align with your changing needs and risk tolerance. Remember that financial goals should be specific, measurable, achievable, relevant, and time-bound. Smart. By setting clear and realistic financial goals, you can tailor your investment strategy to meet those objectives and make informed decisions in the stock market.
Thank you for your joining us. Please subscribe, like, and follow our social media channel. If you feel this information will be useful to you or someone else, please share this video. Comments with your thoughts and questions.